So I was on Instagram wasting time as one does on Instagram, and I noticed a real estate agent post this. And I kept scrolling down and saw another real estate agent post something like that. I followed the rabbit hole down and I started realizing the national rhetoric right now by realtors and lenders everywhere is that interest rates are cheap. You need to buy now. And dude, I was about to pull out my credit cards and start buying real estate all over the freaking country. Is right now really the best time to buy a house just because interest rates are low? And secondly, let's look at the data behind this idea that it's now the cheapest it's ever been and see if there's any truth to it to make sure we make a knowledgeable and not biased decision if we should buy a house right now. So let's talk about that. If you ever see anything like this online on social media, or even if it's like a buddy of yours that you happen to run into Starbucks and they're telling you just real estate knowledge and information, you want to ask yourself this question first. What is the intention behind what they're telling me? Immediately, what most people do is they go into FOMO mode or fear of missing out. Oh my gosh, this guy's right. Maybe 4 years ago it was like, oh my gosh, there's first-time homebuyer programs. Now it's like, oh my God, the interest rates are so cheap. Whatever the situation is, let's face the facts. Real estate agents and lenders have the intention to buy and sell houses, or help you buy and sell houses. So the intention will always be to try to get your attention to maybe see if you can buy and sell. That's it. Regardless of what time of the year or what time of the market it is, during the crash, before the crash, after the crash, realtors always have that intention. So please have that in your mind whenever you read anything online. So first and foremost, let's talk about this chart. So this is a very convenient chart to show you. Clearly, if you look at that chart, and if that's the only chart you ever see, you're going to say, well, it's a good time to buy right now. But there's always more to the story. As pretty as this chart looks, it starts to lose some of its value when it's put against this chart. The chart you're seeing there is basically the average sales price of houses sold in the United States. If you notice, we have been in a steady increase for a while now. Ever since 1965, 1970, it slowly has gone up. It steadily has gone up now to the point where we are in the high 300s or in the low 400s. Now, clearly, this is a national average. Some states and some cities are clearly different, but let's just use this number for an idea, basically. And if you guys start seeing the numbers, you start noticing what the term of a bubble means. If you see here, 1985 to 1990, there was a small bubble. And of course, we know the giant bubble that was that 2000 to 2010 mess. This number of the interest rate being higher certainly loses its footing when you see the bigger picture. Now, I know you're a realtor and a lender in the chat right now. You're probably commenting already, but Javier, the price of inflation. Yeah, you're right. $100,000 house would be worth about $240,000 with, basically to the dollar the way it's inflated now. So yeah, technically, I will say that it is more expensive. However, here's another chart for you. U.S. average household income in the United States in 1985 was around $30,000. So likewise, if I'm using the same logic, $30,000 inflated is this much. So yes, of course, we cannot just look at the price ranges of what it was in 1980s and say, well, of course, houses are cheaper, interest rates are higher. We have to look at the whole picture. We have to also see the average household income. In those times, people on average made about $72,000 and the average price per house was $240,000. So, and if you compare that to using this charts at least, showing what the average income is for today and what the average price range, the average income is $83,000 and the average price range is $383,000. So with just, if you're looking at the inflated numbers, just $11,000 of difference, we're expected to qualify for $143,000 more of a house. Here's also something to keep in mind. Each decade has its context. In just maybe 10 or 20 minutes of research, I've learned that in the 1980s, there was a big problem with inflation with I guess, the market or the dollar or all kinds of things, right? So the government, in order to calm down inflation, inflated their interest rates, even to the point where in some instances I see here that it went up to 20%. Now, realtors and lenders love to bring up this number. Well, back in the 1980s, interest rates were up to 20%. So right now is a great time to buy. But there's context. In the 1980s, the government did that in an attempt to calm down and the inflation that was happening. And guess what? It worked. Now, of course, I'm overgeneralizing there for sure. And I'm sure if you dig in more, there's much more to the picture there. So I would implore you to definitely do your own research. There was a lot of land that was being not only colonized in a way, but they were a bunch of developers building houses. They were figuring out how to go around these mortgages. So we cannot use history as a stable, consistent thing when comparing interest rates, because we have essentially been learning how to effectively use mortgages for the last 50, 60 years. Comparing something to completely different context in history where there's something totally different things that are happening is not wise. Do not use a chart that's being mass produced by people who are trying to help you buy a house or sell a house because their livelihood depends on it as the base for you making your decision to buy a house. So what should you use as the base of buying a house? Well, here's the thing. It boils down to three things, guys. Your budget, your sense of urgency, and your preparedness. Is preparedness a word? I don't know. I'm going with it. Preparedness. Okay. First things first, your budget. Whatever's going on with the interest rate and whatever's going on with the price range, put it into an amortization calculator and figure out what the monthly payment is. It's a fixed interest rate. Please don't get an adjustable rate mortgage, right? A fixed interest rate. Can you afford that monthly payment for the foreseeable future? If the answer is yes, then your budget allows for it. I don't care if the interest rate's 10%. Put it in an amortization calculator. Can you afford the monthly payment, and can you live there for the next 10 or 20 years? Don't be motivated to buy a house just because the rates are going to bring your payment lower. Likewise, on the other side, don't go buy a house outside of your means just because things are great now and you have a good monthly income now. Things could change, guys. Just because the interest rate's cheaper and you can buy a nicer, bigger house doesn't mean you should. Second category is, of course, your sense of urgency. You've been renting for the last 5 years and you have 3 kids and you need a yard, and if you go rent a house, it's the same price, so you might as well buy? That sense of urgency. Is your mom and dad kicking you out? Or maybe you've been renting for 10 years and you're just sick of it. Or maybe you've been renting a house for 20 years and you just want to freaking find a place to call your own and have something to leave for your kids after you move on. That's sense of urgency. You want to make sure you have the sense of urgency, not just because you're scrolling and you happen to see Jimmy John, the realtor, saying, dude, interest rates are the lowest they've ever been. You should buy. And you're like, I should buy because the interest rates are the lowest. No. Do you have sense of urgency? Third thing, of course, is being preparedness. You just want to just pick up your wallet and say, let's go buy a house. Let's go. No. You want to make sure you have been educated and you've been preparing for this. If you do decide earlier, do you want to buy, then start 6 months to 9 months prior, start saving up, start working on your credit. Or maybe just in general, you've made good decisions with your life and you prepared your credit just in case you ever need to have good credit, or you've been saving just because you were taught to save. Great. You want to have some level of preparedness ready to go. So if you have these 3 things, guys, it doesn't matter what's going on with the market. It doesn't matter what's being advertised. It doesn't matter if you're watching a YouTube channel right now ready to buy or sell a house, or you're just watching me because I'm beautiful. You want to have a solid foundation. You want to be prepared. You want to have your sense of urgency. You want to have an idea of your budget. And if you have those things solid, who cares what you see on social media? Who cares what's going on with the market? You're ready to go. You're ready to go. So to answer, finally, should you buy a house right now because interest rates are low? No, absolutely not. Don't just go buy because interest rates are low. Ask yourself instead, am I ready to buy right now? And can I afford the monthly payment? Do I have the sense of urgency? If the answer is yes, it's not easy to buy any time of the year, any time of the decade. It's always difficult. Anything worth in life and having is going to be difficult. Anyways, thank you so much for watching. I appreciate your time. If I called you out on this video, what are you going to do about it, punk?